Good morning, everybody. Happy Monday, all you magnificent melon heads. I hope you guys are well. Today is July 24th, 2023. Top story this morning, wheat prices are spiking. There was attacks by the Russians on the Ukrainian city of Reni, I hope I'm pronouncing that right. Now, the big difference here, this is after last week's attacks on the port of Odessa, which was the main grain port on the Black Sea. And so ships were avoiding that area as the Russians... Oh, I got black. What's going on here? My screen is black. Why is my screen black? It's not showing a black screen for me. Oh, there it is. You know what it is? It's the internet connection. Son of a gun. I got a lousy internet connection, guys. Well, we're just going to have to deal with a fuzzy black for the live stream today. I'm sorry, guys. We got fuzzy Jack here. Let me just drop some other devices off of the Wi-Fi, see if that makes a difference. I don't know. Okay. I apologize for the grainy screen, guys. It's got something to do with the internet connection this morning through StreamYard, but we must press on. We're doing it live, such is life. Okay, the Russian attacks on the city of Reni. This is a city much further to the west. It borders Poland on the Danube River, and that is very significant because, well, this is not where they were attacking last week. All of the grain shipments had been flowing further to the west in order to move down the Danube River to avoid the Russian attacks on the city of Odessa. Well, that is no longer the case because they have expanded those attacks to include even the westernmost part. Now, I would add this is dangerously close to Polish soil, which would be a NATO member, and, you know, errant missiles, if they were to hit in NATO territory, who knows what would happen with this conflict. So wheat prices are surging this morning. It looks like the Russians are dead set on an outright blockade of Ukraine. They're not letting those grain shipments out, and they're not just limiting those attacks to Odessa now. Other stories going on. We had Chevron surprised with their earnings on Sunday. The company was supposed to report on Friday. For whatever reason, they made the announcement last night. It had to deal with an extension of the tenure of their CEO. He's not going to be forced to retire because of his age. So they reported last night. Chevron reported better than expected earnings, although they were down significantly year over year because oil prices are much lower than last year. We've also got Yellow Trucking. Shortly after my live stream Friday afternoon, we were talking about Yellow Trucking. The company was... They had missed their payments into the company's pension system and the company's healthcare fund, and so the Teamsters were threatening to go on strike. The company took Yellow to court, and on Friday the court ruled that, the Yellow took the Teamsters to court to try to block the strike. Well, the court ruled in the Teamsters' favor. They said, Yellow, you can't block the strike. You can't force these people to work if you're not paying for their pensions and you're not paying for their healthcare. And so it looked like there was no avoiding that strike. Well, late last night, the company cut a deal, and they have, long story short, they have 30 days to make these payments that were due last week, about $50 million into the healthcare and the pension fund. Well, they only have about $100 million cash left, but they expect this payment to be made within the next 2 weeks. So it looks like Yellow has avoided disaster for the time being. And one more thing I want to talk about, we're going to talk about it a little bit. Keep an eye on a company that reports earnings later today. And that company is Packaging Corporation of America, ticker PKG. I'm going to show you guys some stuff that hopefully this grainy screen that I'm seeing out of the corner of my eye here doesn't persist through that. But right now, the expectations for this company are pretty low. I don't think they're low enough. I think PKG is going to report terrible earnings after the close today, so keep your eye on that one. And with that, we're going to shrink my big melon of a head. And guys, I apologize for the grainy screen here. We're going to see if I can still get these charts and these articles to you in a visible manner. It looks like it's not too bad. I have my stream going here out of the corner of my eye. Fear Greed Index is back at 83, now well over 50 days. Up here in extreme greed territory. Look at this thing. It's been over 70. It's been in extreme greed territory basically since the second or third day of June, and it has stayed there. Number go up. We've seen this one before. The S&P 500 is up 21 points this morning, or 0.47% at 4,557. We've got the Dow is up 86 points, or 0.25%, 34,314 for the Dow. And the NASDAQ is up 76 points, 0.54%, 14,107 for the tech-heavy NASDAQ. Looking at the U.S. dollar, we've got the Dixie is up again today, 20 basis points at 101.27. So is it a dead cat bounce or is it a rejection of these lower levels? We still don't really know, but the DXY right now is looking pretty good. Big spike at the European Open overnight, and it looks like that's carried through into now. Looking over at the bonds, I don't have my bond screen queued up like I should. Rookie mistake, Jack. Here we go. UK-US bonds. We have got the 30-year Treasuries down about 3 basis points. The 10-year Treasury also down 3 basis points. 2-year basically unchanged. And the 1 month is up about 1 basis point. So the yield curve is not really moving right now. The long end is down a little bit. So a little bit more inversion of the yield curve, but not really anything going on there. Looking over at the commodity space, we got gold is flat for the day, down $1.45, but essentially unchanged, $1,965 for gold. Silver down 32 cents, though. That's 1.3%. Back under $25 at $24.52 for my favorite of the shinies. Crude oil looking pretty good this morning at up 40 cents or 0.54%. Crude WTI trading at 77.47, back above that 50-day moving average. We'll look at that oil chart in just 1 second. But the big story this morning is, of course, the grain futures. Look at this, up 6.1% for wheat, 739.6. That's a big move in wheat. And we've even got corn is up almost 3% this morning. So let's take a look at some of those charts. First of all, the oil chart. Let's zoom in here, guys. Check it out. We broke that 200-day moving average that's been acting as resistance. Look at that. We had a couple of rejections there over these last few days. This morning, we're looking higher. If that holds, that means oil prices are heading higher. And, well, we'll see if it holds. We've made a few moves like this before, and it has not held. But I would add right now the RSI is a little bit lower, so it's got a little bit of room to run here. Keep an eye on that 200-day moving average for oil. I'm not yet bullish oil. But if I see a retest of that 200-day and it moves higher, I might consider making an oil trade here. Speaking of oil, Chevron beats earnings forecast while extending CEO's tenure. That hit last night. The Chevron board waived the mandatory retirement age for their CEO. I guess that CEO retirement age thing is why Chevron reported on Sunday for some reason. They were supposed to report on Friday, but it happened last night. Though adjusted earnings of $3.08 per share were higher than Bloomberg consensus, net income dropped to $6 billion, according to a statement on Sunday. That's the fourth straight quarter of lower results for Chevron, which have fallen to almost half the level of a year earlier when oil prices surged after Russia invaded Ukraine. So Chevron's earnings are in decline along with these oil prices, but still they're beating expectations, and so Chevron shares are up by 1.6% this morning. But the bigger story is wheat futures. Check out the wheat chart, guys. Let's zoom in a little bit. And there's another one that just broke its 200-day moving average. Again, I want to see a retest before I make this trade. We failed to retake the 200-day moving average a few times before, but we're moving sharply higher this morning, and we've got room to run on the RSI. And the reason driving that big move in the wheat prices is right here. Russia attacks Ukraine's vital Danube grain export route. This is just dated just this morning. This happened overnight. Russia destroyed Ukrainian grain warehouses on the Danube River in a drone attack on Monday, targeting a vital export route for Kyiv in an expanding air campaign that Moscow began last week after pulling out of the Black Sea grain deal. Last week's attacks mostly struck the seaports of Odessa, but Monday's pre-dawn strikes hit infrastructure along the Danube, an export route whose importance has grown since the demise of the deal, allowing Ukrainian grain to transit the Black Sea. Now, let's take a look at the map here so you guys can get an idea of why this is so significant. So here, let's zoom out. We're looking at the Black Sea. Here we go. You got Ukraine is right here. You've got Russia to the east. Now, when we zoom in here, hold on. Let me log in this bad boy. It's supposed to be showing me boats. I had to reboot my computer for tech issues. Here we go. Now I see boats. Okay. So here is the Russian port of Odessa. It's the Ukrainian port of Odessa. Here's the Crimean Peninsula down here to the south. Now, you notice there's almost no boats up here near Odessa because the Russians said, anybody trying to get into that port, we're going to sink that ship. We're going to act as if it's carrying military aid for the Ukrainians. So no captains are really been willing to call the Russians bluff right now. I mean, there's a couple of, each one of these dots here represents a boat, these green and blue dots, but these are not moving. These are boats that have been sitting there for a while. There is essentially no marine traffic in or out of the port of Odessa right now. Nobody's willing to sail there because they're not going to call the Russians bluff. Now, since that announcement, most of the boats have been traveling over here, this parking lot outside of Missouri Bay. Now, that is at the mouth of the Danube River, and these are all cargo containers and bulk grain carriers. So all of the traffic that might have otherwise gone up here to the port of Odessa, where the Russians were attacking last week, is now going to park outside of Missouri Bay, and you can kind of see the path that these boats are taking. This is the Danube River, and right here, where's the city of Reni? It's not really shown on the map because it's not a very well-known city, but it's somewhere along this river here where these boats are traversing that the Russians attacked last night. And so, this port that all these boats started congregating around because they figured this was a safe place, all the missiles are hitting Odessa. Well, now the Russians are trying to cut off that flow of grain out of the Danube also. And that's why wheat prices are reacting so strongly to this. Now, I want to add there's still room for escalation here because if you look a little further down in the Black Sea, you see this line of traffic here, all this boat traffic. This is the Russian grain exports coming out of the Black Sea. And this is all heading through Turkey, right? They had the Black Sea grain deal. Now, if the Ukrainians were to counterattack somehow, were to retaliate for these attacks on grain infrastructure, that would be a logical target, either these Russian ports here or somehow hit these boats. Now, if the Ukrainians were to hit civilian shipping carrying food, that's a difficult thing to sell in the court of public opinion because Ukraine is dependent on Western aid, and sinking civilian ships, killing merchant mariners, and driving up food prices is an easy way to lose public support. Not to mention, I'm not sure if the Ukrainians even have the capability of hitting this because that's a pretty good distance. I'm not sure if this is even in range of any of the Ukrainian anti-ship missiles or any of their drones or not. So it's not cut and dry whether or not the Ukrainians are going to retaliate and hit this trade route or not. But, if we would don our tinfoil hat for just a moment here, let's think about this from the perspective of, let's say, hypothetically, a Malthusian cult that gathers once a year in the city of Davos, Switzerland, to talk about ways to control our lives. Well, higher food prices is something that those people might like. So let's not rule out Ukrainian retaliation against Russian Black Sea grain shipping in retaliation for these attacks on Odessa and now on the Danube River. And if that happens, wheat prices are going even higher than they've already gone. Again, I'm not saying that's definitely going to happen, but it's the 2020s, folks. Let's not rule that out. All right, off with the tinfoil hat and moving on. Let's talk about the Yellow deal because this was a big deal last week. 22,000 employees. It's the third biggest LTL freight carrier in the world, in the country, not the world, sorry. Yellow loses attempt to stop strike. This was Friday afternoon, right after my live stream wrapped up. The company said in a plea to the judge that it will be forced to file for bankruptcy. Yellow took the Teamsters to court, tried to get a judge to force them to go back to work, even though Yellow was not paying into the pension or the healthcare funds anymore like they had contractually agreed to do. The judge said, no way, the Teamsters can go on strike if they want to because you're not paying them what you told us you were going to pay them. So that looked like it had sealed the deal for Yellow. That was on Friday. But then last night, and actually I guess it was in the middle of the night because this one was just updated this morning, the strike at trucking firm Yellow averted after a deal. So it looks like they dodged that bullet here. U.S. trucking firm Yellow averted a threatened strike by 22,000 Teamsters, represented workers on Sunday, saying the company will pay more than $50 million it owed worker benefits and pension accruals. Agreement by the Central States at the urging of Teamsters gives Yellow 30 days to pay its bills, with the understanding the company will do so within the next 2 weeks, Teamsters Union said on Sunday. Now, Central States is the pension fund that the Yellow employees are part of. So this pension fund agreed to a deal that we're not going to kick the Yellow Teamsters out of our fund as long as Yellow promises to make that payment within 30 days. And Yellow said, yeah, we'll pay you. The check's in the mail. You'll have the money in 2 weeks. So we'll see if they actually follow through on that promise. As of Friday, Yellow had about $100 million in cash left, and that company is burning through cash like crazy right now because the economy is slowing and nobody is shipping things. We've seen it in the manufacturing PMIs. We saw it in that video I did about cardboard a few weeks ago. We saw it in that video I did about FedEx earnings a few weeks ago. We even saw it last week in American Airlines earnings report. American Airlines is not shipping as much freight in their passenger liners as they used to. So freight is not moving in America because people aren't buying things because people don't have any money left because of inflation. And speaking of that, watch out for this one. This is ticker symbol PKG. These guys report after hours today. Packaging Corporation of America. And, well, guys, let me just say I had an interesting conversation this weekend with a friend of mine, real nice guy, retired sales representative, and he used to sell corrugated cardboard. And we were sitting around having some burgers, having a couple of beers over the weekend, and I asked him about cardboard sales because I've been following this on the channel. I did that video about cardboard, and he said he's been talking to a couple of his buddies, some of his former colleagues who are still working, and I don't want to go into too much detail here, but suffice it to say it's even worse than I thought. Some of the things I heard, I don't know how much detail I want to go into here. These sales are not just down a little bit. These sales are virtually wiped out. And these are guys who have not lost any accounts, the same number of customers. And I'm hearing numbers like 82% declines in orders. Now, even if these guys are exaggerating by a huge margin, this is still way worse than anybody is expecting when this company reports tonight. All right. Now, I don't have any position in this company at the moment. I'm looking into it. I may make a trade on this one, but I have not made any trades on this yet. But let's just talk about a couple of things here because this company ramped up production. They took out debt. They ramped up production in 2020, 2021 with the shortages and the logistics logjam. And now those orders have dried up. Now, this is a Zacks article from a couple of days ago. What's in store for Packaging Corp's earnings? And I just want to read you a couple of numbers here. Now, earning expectations for this company are pretty low. They're already expecting a 39% decline in yearly earnings. The consensus estimate for total sales is pegged at $1.99 billion. That would be an 11% decline from a year ago quarter. All right. Now, some of the numbers I heard in this conversation, like I was saying, upwards of 80% declines. Well, looks like right now the consensus is about an 11% decline. So even if these guys are exaggerating by a huge margin, still these expectations are not nearly low enough. An 11% decline in earnings is nowhere near what I heard over the weekend. And just a couple of things I want to look at also with this PKG company, guys. This is their investor relations website at Packaging Corporation of America. Every single one of these Form 4s here that's listed on their investor relations website, every single one of them is a company executive selling stock, including the CIO, the CFO, and the CEO, along with another half a dozen senior vice presidents or executive vice presidents. Every single one of these filings from June 30th on this Form 4 is a senior manager within the company or an executive or a C-suite executive dumping company stock. And almost all of these transactions are in the $1 million range. Insiders are dumping shares like crazy of this company. And just looking at the technicals, this is Packaging Corporation of America stock. This stock is actually up year to date. It's up this morning. But let's just zoom in on the last couple of days here, guys. You see that blue line, the 50-day moving average crossing below the red line, the 200-day moving average? You see right here when that happened? That's a death cross, guys. That's a very bearish technical indicator. So we've got a death cross that happened right here. Now, the stock has been on a tear these last couple of days. Why? I don't know, because this has been happening as one of the biggest trucking companies, Yellow, in the country, has been on the brink of bankruptcy. Well, if the trucking company is about to go bankrupt, then what do you think the box company is doing? If there's no boxes to put on the truck, or if the truck doesn't need to load up boxes, then the people who sell the boxes probably aren't doing very well, are they? Also, take a look at the RSI here, up at over 70. This thing is so overbought and ripe for a turnaround. Guys, they're reporting after hours today, and let's just say I'm expecting something like this after this company reports after hours today. So, like I said, at the moment, I have no position in this company. But I'm going to look into buying some puts in this one. I was toying around with it over the weekend. They're pretty illiquid. It's not a lot of people trade in and out of this one, so I'm not sure if I'm actually going to pull the trigger on it right now. But this is going to be a good indicator about the health of the economy, all right? If the company that makes the boxes is posting lousy earnings, and if the company that moves the boxes, yellow, is on the brink of bankruptcy, then what does it say about the companies that make or sell the stuff that goes in the boxes, i.e. everybody else? This is an important thing to watch. They report after hours today, so we'll see what comes out of that one. All right, guys, I got a couple of people I got to thank up here. Where are you guys at? Mr. Steve Woitis, thank you, brother. He says, markets continue to fight the Fed. What could possibly go wrong? First rule of investing, Mr. Steve, you got it, buddy, is do not fight the Fed. Now, right now, the Fed, they're still quantitative tightening. They're going to raise interest rates again. I mean, the odds of a rate hike on Wednesday, which I will be going live on Wednesday for the FOMC press conference, it's basically 100%. They're going to hike today. We don't know if they're going to hike again later this year. There's two distinct camps right now. There's the higher for longer camp that says the Fed is going to hike and maybe hike some more and then leave rates higher for a long time. There's also the pivot camp who says the Fed is going to lower rates as soon as later on this year. I don't know which one's going to win. Right now, higher for longer, I'd say, has the best odds. But we did see in March that the second things get bad, the Fed will turn on the liquidity again. They created the Bank Term Funding Program and started pumping money into the system. So are markets fighting the Fed right now? Yes, they are. I think you're right, Steve. Markets are fighting the Fed. Maybe not as much as it looks like, though, because the Fed did inject a lot of liquidity in March. So Fed is sending mixed signals at the moment. But thank you very much, Steve Woitis, sir, for the support of the channel and the super chat. And thank you to Mr. Mike Bender for your super chat, sir. He says, good morning, Jack. Here's a small donation for more pixels. I got to get me some of those pixels this morning, Mike. Yeah, guys, I apologize for the black screen and the graininess when I first went live. It's my internet connection this morning. I don't know what to tell you, guys. It's out of my control. The interwebs are the interwebs. And, well, we'll put the tinfoil hat back on. We'll say they don't want this message getting out. They're sabotaging my internet speed so that you don't get the message about Packaging Corporation of America about to post a lousy earnings report. So that's my story. That's what's going on today. All right, guys, I just want to say thank you so much, everybody, for everything you guys did. Thank you for spending your time with us today. Thank you to Steve and Mike for the super chats, the support of the channel. Thank you to my Patreon supporters for everything you guys do for the channel. You guys are awesome. Hi, Mom. Hi, Dad. I love you guys. Everybody have an awesome day. And until next time, live small and dream big.